in the 1980s, right, diamonds itself, they came out with a price list called the Rappaport price list. What happened is that at one point, towards the end of 1980s, suddenly the price of diamond crashed. The purpose of the list, right, was for investment and all that. But when the price crashed, they realized that it doesn't work because the list is based on transactions. You know, it's not based on returns or earnings or things like that. It's different from the typical investment. You know, typical way of investing in stuff. Yeah, you need return, income, and all those kinds of things. So for gemstones, how you get income? You get income, what? Right? You put money in there, you get income, right? For gemstones, you put money there. How you know whether the capital will appreciate, right? Basically, it's not the capital that will appreciate. You're thinking that the gemstone value will appreciate. Why? Because out there people are buying stuff, or out there people are spending money on their marketing so that more people are buying things. Or out there people realize that, hey, this one no more production, so this becomes rare, and therefore if people want it, then you get a value to it. But even if it's very, very, very rare, but nobody likes it, nobody wants it, also no value, right? So if you think of gemstone as an investment, you buy this as an investment, you'll be very disappointed 10 years down the road. Because how many people would want to buy from you? You know? So the disappointment might be there. The only reason why the value will increase is because, say for example, the market inflation, because of inflation is one reason. So if inflation, right, so 3% down, 3% 10 years down the road, okay, start based on inflation, this one value will increase. You know, actually it's almost like property. So property, we think that we buy property as an investment, like Singapore, right, and then it will grow in value over time. It really, really depends. It looks like it grows in value, but many a times it's because of the inflation, because of the interest rate has gone up and so on. Yeah, so it will be disappointing to buy this as an investment, only to realize that 10 years down the road, you actually don't make a lot, or you can't at all because cannot sell. Okay, so investment always must have returns. Okay, so yeah, for my teaching, I always teach my students, you buy based on appreciation. You appreciate the stone, you like the stone, you know, you see already, you feel happy. Alright, but then the question is, how do I know how much to pay for this one? You tell me no investment value, no appreciation and all, how do I know to pay this one? Willing buyer, willing seller. Okay, if I selling, right, I must be able to get this from somewhere, right? So I paid this for a certain amount of money. And then I put here, I have education, and then I have all these things, my overheads and all that. So I sell it at a certain price above. I have my, you know, livelihood and all that. Are you willing to pay? If you're willing to pay, that's the price. Make sense? Correct? Yeah. So some things are very beautiful. Wow, but 30,000, 50,000, can or not? I don't know, you know. Then we have met people who one shot can willing put 200,000 in a stone. It's like, I also don't know how it works. First, I don't know where they get that money, but you know, yeah. So it's along that line lah. If you think of gemstones, you know, buy it for appreciation. Do you like it or not? Because you like it, at the end of the day, right, you can, if you really want to let go, or if someone wants to buy from you because they say, wow, this one very nice also, they also appreciate. Yeah, then you sell also, you feel better, right? Or you don't sell also, you feel good, like, you know, I got this, nobody else has. Yeah, so, yeah, that's what I can share lah. Yeah, is there any questions that you want to ask? No, thank you.
Thank you.
Yeah, if I have a whiteboard, maybe I'll draw.